We're privileged to be hosting this conversation where we delve into cross-border banking as a catalyst for Africa's transformation. My name is Caroline Yambesi. I'm the head of strategy at CRDB Bank. For those of you who don't know us, CRDB is the largest bank in Tanzania by balance sheet. We also have operations in the Republic of Burundi, where we have been for 12 years, and we're currently the leading bank as well, profit-wise. And in July last year, we started our operations in DR Congo. We specifically began operating in Lubumbashi because that is where you have the trade connection with Tanzania. And this year, we hope to expand to other parts of DRC as well. At CRDB, we understand that financial inclusion is not simply about having an account and being able to transact locally. It is also about being able to freely trade and move across borders. We often get asked, why Burundi and why DRC? And the answer is very simple. Tanzania is surrounded by 8 countries, 6 of which are landlocked, including, that's if you count the eastern side of the DRC. Given this fact, our ambition as a bank has always been to ensure that we're also able to serve the needs of our customers, including those traders, the SME traders, as well as large traders who have trade transactions and move goods across the countries. Cross-border banking to us is more than just a movement of capital across borders. It is the lifeblood of economic integration, fostering trade, investment, and growth. It is the bridge that connects diverse markets, cultures, and ideas, enabling us to build a more prosperous and inclusive Africa. Our esteemed panelists, who bring a wealth of knowledge and experience, will share their insights on how we can harness the power of cross-border banking to create sustainable economic growth.
I believe Burundi was around 2012, 2013, and as we just heard recently, DRC was, the expansion was last year, and the business model of CRDB is actually quite interesting in itself. So hopefully we'll, by the end of this conversation, we'll understand why they're expanding regionally and what type of model are they taking to the region. So at our group, we're going to be releasing an index next year alongside the BCA, the Business Council for Africa, and the chair of that of the BCA is a former banker called Arnold Ekpe. Arnold Ekpe oversaw Ecobank's regional expansion from less than a dozen countries to over 30 in a short number of years. And his philosophy or his thesis, he believes that you need 3 things really to develop at pace. You need power, so electrification. You need road and rail infrastructure, and the third thing that you need big banks. So so we're going to do the red indicators, so the real economic transformation indicators. And one of the things that we'll be looking at is really the strength of banks and the role that they can play in driving development. So one last thing on CRDB, but if we look at CRDB today and if we look at CRDB 10 years ago, so we saw that in the past few years they were involved in syndicated loans for the government of Tanzania in terms of the hydropower, so the big project there, and also the standard gauge railway project that the government of Tanzania is powering ahead with. And really it's great that we see local banks, so African banks, really be part of these of the financing. Yesterday when I was speaking to Abdulmajid, he talked about looking at value chain financing ultimately. So here we're going to look at the value chain in terms of the role of players like Afrexim Bank, the role of international DFIs like Norfund and BO Invest, and others, what they bring to the table, and how they can support our own domestic banks in growing regionally. But maybe first of all, yes, I mean, Caroline said we'd be surprised to see a Tanzanian bank go into Burundi and DRC. I mean, it's a good question to ask, I believe, and it's one we can start with, Abdulmajid, if I may. Why Burundi? Why DRC? Especially that it's different language, different mindsets, different regulatory environments. Wouldn't have been easier to expand more locally.
I think Caroline, when she was talking about, she just highlighted slightly why CRDB has decided to expand to the other markets. despite of CRDB being the biggest bank in Tanzania, we are doing extremely well in the country. And we have covered all parts of the country in different mechanisms, apart from bricks, mortar, digital, in terms of alternative channel. But there is a need to look differently. And that's why CRDB thought about what do we see from the region and what should we do. We have seen other competitors coming to Tanzania, and they have been operating. And CRDB decided in 2012 to go to Burundi as the first entry. I think there was a very big question. Why Burundi, not other countries? Of course, many reasons poses, which are equally the same. I think the biggest factor is about what our potential market we see in the region. Because when you look on these particular countries around the East Africa and Central Africa, most of these countries are unbanked, and there is less financial inclusions. With the current infrastructure we have created in Tanzania, it gives us much strength to expand regionally. So went to Burundi. Last 10 years, we are number one, but many questions raised by that time. And then we have a philosophy of growing steadily, ensure that we are able to move cautiously, but we are able to deploy the model, which is better for ourselves. In Burundi, went with a greenfield philosophy, of course, 100% ownership, with intentions to deploy our own value, our own culture, while adapting the environment. And we tend to localize our operations. That means from the resource perspective, management, board, we have to be embedded with the local content so that we are able to navigate the culture, the environment, while take advantage of the business. But the other things which is also important, diversifications. With the diversifications focusing on our key segments, SME being important, special groups, when you talk about human and youth, all these countries, majority of business communities are informal, less formal. With the CRDB, we are able to formalize transformative sectors like women and SME to the financial systems. So our expansions, we recently last year moved to DRC. And I must take this opportunity to appreciate and thank our partners, Norfund and IFU, because we believe that if we are to go far steadily, we have to have right partners. Norfund and IFU joined us to invest in DRC, and we have started well. But there is immense opportunity in DRC. Almost 80% of goods of DRC pass through Tanzania port, and that means we should be able to provide infrastructure. But investment in these regions, there is quite a lot of things you have to consider. And that's why we spoke about partnership. Partnership is not related about global, but also localizing partnership. We're able to create a value chain that will always put a framework in the operations to ensure that the cost of operation becomes seamless and efficiently. So where do we see, how do we see CRDB position itself? We have not done enough. And the opportunity within the market in East Africa, they are still immense because most of the population is unbanked. And we should be able to do even much better.
What's interesting is you said that you went both greenfield in DRC and Burundi. So you went there, started your own bank as opposed to going and purchasing an existing smaller bank or an existing operator in the region. Is there a reason for that? And is that something that you would always consider, or would you consider other types of investments as you increase your expansion?
We always do options evaluations, and I think we did equal for those two markets in terms of whether should we go solo, greenfield, should we partner, should we acquire. I think the best options for us after making assessment of the market, we believe that greenfield will be much better for us. And then this is because that acquisitions is a good strategy, but equally it comes with challenges. And maybe there was no opportunity for a right bank to acquire. And that's why we decided to do a greenfield. When we are doing greenfield, it actually, we embed our operations with the local market as if it's a local bank. And that makes us do better and improve our operations as we start.
So last question before I go to the next panelist. So just in terms of detail, in terms of your partnership with Norfund in DRC, so what is it? So they took an equity stake in it, so it's, you explained it a little bit to me yesterday, but what was the basis or the structure of the partnership with Norfund and your other investors in terms of your regional expansion?
CRDB, I think one of the key pillars we believe is about working together and inclusive. And we tend to believe that all partners we engage with, we have mutual beneficial with intention to achieve the intended goal that will create impact. And then we approached Norfund because their values resemble our values. Equally, that our partnership is not about equity, it's beyond equity. And that's why we thought Norfund and DRC and IFU are the right partner, but we have many partners, including my friend sitting close to me, Afrexim. These are being supportive partners in terms of supporting CRDB to grow our business in terms of trade, infrastructure, and support. And we have been working well for many things, but also capacity building. So with partnership of the global partners, we are looking forward about working together in terms of financial solutions, capacity building, equity investment, but at the same time technology transfers. Because we believe that with technology, we should be able to advance better, efficiently, and accelerate our operations for those markets and more effectively.
William Nyauke from Regional Director for East Africa at Norfund, welcome, thanks for joining us. First of all, what did you see in CRDB, and then how are you viewing in terms of deployment of capital, in terms of effective deployment of capital? Is it through the banking system?
Thank you very much. So my name is William. I work for Norfund based in Nairobi. We're the Norwegian DFI. And thank you very much, CRDB, for this opportunity to speak here. So what did we see in CRDB? I think from Norfund perspective, first, financial inclusion is one of our base impact mandates. And banks sit at the center and core of financial inclusion in Africa. So we do work with banks that are leaders in their markets, that are aligned with our values, as the CEO has mentioned, and targeting sectors that are priority for Norfund. So some of the priority sectors, just to mention, is renewable energy, agribusiness, and manufacturing, where CRDB is very strong. We also look at waste management and water supply, and these are sectors that are actually very social, and I think banks that are leading in their markets tend to be strong in this sector. So CRDB is a strong bank, and therefore we find them as a natural target for an institution such as Norfund. Now, we are a wholesaler in the financing value chain, and we need banks and other such institutions to deploy capital to SMEs that we cannot reach directly. So financial inclusion, or financial institutions, as we call it internally, are our conduit to reach entities that we cannot deal with directly, either because we don't have the capacity, we don't have the know-how, and we don't have the instruments to reach all these institutions. So if you look at B2B, B2C, so we use banks to get to the consumer, the final consumer of capital. And is it the best? I think it's one of the many solutions we have in our toolbox. So we invest equity and debt, both directly and indirectly. Now, banks are indirect investments for us. And equity is usually for growth, to support the balance sheet, to strengthen the balance sheet. But we also do subordinated debt, which is usually long-term and is more equity-like. But we also just do senior loans, which then go directly into lending into other companies. So I think if you look at our portfolio, the banks or investment in financial institutions is actually about 35% to 40%. So that's quite significant. Directly, we invest in renewable energy, which is mostly project finance. That's about 40 to 50%. And directly through investments in companies is about 15%. So then it tells you that actually a big chunk of our financing goes through banks and such like institutions.
Tell me, in terms of this particular transaction, so you took a 25% equity stake in the new bank that's being formed in DRC. Is that right?
Yes, that's right. But we actually have a larger relationship with CRDB in Tanzania. In addition to what we are doing with them in DRC, and why we actually like regional banks like CRDB is because it actually allows us to go into countries that we don't have presence. So in East Africa, we're only 10 of us, or 11 of us sitting in Nairobi, covering the whole region. There's no way we're going to cover DRC from here. And going through CRDB actually allows us to reach companies in DRC or other markets that we would not ordinarily even think of reaching.
And as Norfund, so the regional banking model, it's something that you think works. It's something that you encourage. I mean, what's the thinking on sort of the cross-border banking and regional banking?
The answer is yes. Look, the stronger the banks, the better the intermediation role that they play, and regional banks tend to be stronger from my point of view because they have to comply to multiple regulators. They need a lot more capital to go regional. In terms of management and corporate governance, the regional banks actually have to be a leg up compared to banks that are just serving local markets or niche banks in specific countries. So we actually, I think, prefer to work with regional banks. You won't see us a lot with the international banks, like the multinationals, but we are more inclined to support the regional banks because I think from an regional integration perspective, relationships, they understand the market better. They take more risk compared to. I don't have anything against the international banks, but actually, if you look at the level of risk that the regional banks are willing to take, it's a kind of thing that we as a development institution would want to support. So that's the answer is yes. We actually think regional banks play a very critical role in financing trade, cross-border trade, and allowing capital to be allocated to the right sectors.
Afro-Exim Bank has been supporting other groups expand regionally. I know that you facilitated a number of investments for Vista to purchase assets of Société Générale and other exiting banks. But tell us a little bit about the role that you've been playing also from a correspondent banking perspective and actually as to help these regional banks such as CRDB in terms of cross-border payments and payments in general.
Thank you. Just a bit of history. Afro-Exim Bank, established in the early 90s, was actually a result of the pulling out of international financial institutions. So you talk about financial inclusion, Africa had been excluded from financial markets because certain countries in South America had defaulted on their international loans. So it's natural that third world countries get excluded because international lenders don't want to manage that kind of risk. So that's what we saw in the 1980s. And I was here attending some event where I demonstrated the amount of capital from one financial institution that was surveyed, lending out support of about $1.9 billion in 1984. By the time we reached 1987, it was only about 600 million. One financial institution, how people retreated. So retreating from perceived risk markets is what international financial institutions do. So that's what happened, and the bank was established. And we were primarily established to facilitate trade. And intra-Africa trade is one of the key elements why we were established. And under our current strategy, we actually have implementation of the AfCFTA and support of intra-Africa trade as a pillar under our strategy. Touching on what we are doing in order to support access to trade finance, is we work with local banks. So we have a target that by 2026, we should have 500 banks as considering Afreximbank as its correspondent banks. We are currently about 300, and more work still to be done. So how do we do it? A bank like CRDB is a client of ours. We provide them an array of services, amongst them capability to do trade payments. So we have what we call the Afreximbank payment, AFPay. We offer AFPay to a commercial bank to facilitate payment for trade activities with their buyers and sellers. So they receive money after exporting goods, but they also have to pay for raw material to do imports. So that's how we intermediate in that regard. And it's quite critical to also provide trade facilitation through confirmation of letters of credit, which is what we do. And I think in the region, we are actually a confirming bank today of up to $3 billion. So that's trades that we do, supporting clients who have got limits with us, either importation of raw materials or giving an IRIU reimbursement undertaking so that people can trade safely. So that's the essence of Afreximbank's dealings with clients. And now you speak about banks that are doing cross-border banking. So we treat them, or we view them as essential in the sense that traders who bank with them in one country, and they can actually facilitate payments to suppliers of goods in another country. So that's where it's to try and formalize the trade and make it open. And we do this having launched what we call the Africa Trade Gateway. So the Africa Trade Gateway is a platform, B2B platform, that we have under it. One of them is the ATEX, the Africa Trade Exchange, which we ensure that a verified supplier is onboarded on the platform, and he can display the goods on the platform. Buyers come in, what do? They take the goods, or they order goods that they want, then you make a payment using your commercial bank. So we are encouraging our commercial banks to onboard their clients on the Africa Trade Gateway. Because on that, there is the ATEX, which is the Africa Trade Exchange. We can also introduce them to the Pan-African Payment and Settlement System. And there is also verification that is provided through our MANSA offering. So that's KYC, customer due diligence. That we're a platform that enables traders to view. If you wanted to trade with Kuda, who is based in Burundi, and you don't know who Kuda is, but Kuda is loaded in his information, his credentials on the platform. It makes me easier to be located. So you can verify and identify that that's a genuine company that you are dealing with. So you imagine if you are on the platform and you are trading goods. So banks can also do the settlement and can also finance under the on that platform. So there's various issues and initiatives that we are doing in order to reach out and facilitate cross-border payments. And that's what we're doing. Following the retreat of international banks, I think we will see this as a phenomenon. It's not new from Afreximbank. We know it happens every other time. And that's why we are here, to have that relevance and ensure that African markets are served.
In terms of yourself, you're an investment officer at BioInvest. So in terms of your deployment of capital, what is it? How are you looking at it? Would it be to support banks expand regionally? And what do you bring to the table ultimately? I mean, we spoke about equity, debt to some extent, but ultimately, I think Abdulmajid said what he wants partners who will be able to accompany him or his institution in terms of transformative impact. So how do you guys look at it from BioInvest perspective, and also from the sort of cross-border banking perspective as well?
Thank you so much. My name is Paul from Bio, and we are the Belgian Development Finance Institution, quite similar to Norfund. So we take a sort of similar approach to Norfund because we are development finance institutions. We offer debt, we offer equity, and I think one of the main things we look for is that long-term partnership because we have a long-term view. We don't want just to come in and leave. Our capital is patient. We also provide other capacity building initiatives. We have technical assistance facilities that are able to support banks and other institutions that we support to be able to build just beyond the capital that we provide. We look at regional banks because of the impact they're able to create through different countries. And one of the impacts that we look for is SME lending, because we believe SMEs are the engine of growth in this part of the world in terms of economies, in terms of creating jobs and opportunities. But then also we look at the green agenda and the climate agenda, because that is huge for us as a globe, actually, in Africa. And then we also look at lending to women and also to youth, but especially women initiatives. And also agriculture is one of the main sectors that we look at because it's one of the biggest economies, or rather sectors, that are supporting this African continent. So those are some of the things we look at. And basically we're looking for a long-term partnership, and when we go in, we also try to harness the power of other partnerships that can enhance our investment. So we will look for the right legal advice, the right regulatory advice, the right tax advice, because we recognize that there are different countries and different regulations. So we don't want to go in blind. We want to have the best of the knowledge, because that will help us. It will help us, and it will help maybe the bank to have the best. Yeah. So those are some of the things that we look for and look at.
So, and in terms of deployment of capital, is it largely through financial institutions, or is it supporting projects themselves directly? How do you go about it?
Yeah, we do both. So we support financial institutions like banks and microfinance. We also deploy capital through private equity and VC funds as well. But we are having a big drive now to do more direct investments into companies directly that are doing manufacturing, agribusiness, logistics, transport. So we have a bit of both, because obviously banks have the head start of being, and the capital and the resources of being able to reach many more people. So we will continue to do both.
And in terms of the banks, what is it? Is it lines of credit? Is it capital? Is it what is it when you work with the banks? Yeah, it's both. Though we've done more of debt, so we've done senior debt and sub debt that we've supported even banks here in Kenya and in the region. We're looking for more to support. I think CRDB is a very good candidate, and we look forward to a partnership in the future with them. We look for well-run banks or institutions with good governance systems, which I believe CRDB is one of those, and that is a leader in the market. Yeah. So Abdulmajid, if I may come back to you, what's interesting actually when you were telling me the story yesterday was that the transformation of the bank was actually moving from a corporate lending model, let's say, to an SME lending model. So reaching the grassroots, and that's actually what's been the driver of the bank's transformation, the bank's growth, and obviously technology and other reforms have also led to a better performance in terms of reducing the cost of loan, your cost and your cost base, and improving your operation efficiency. But ultimately, the point that I'm trying to get to is, the reason you've been able to attract partners such as Norfund is because of the fact that you actually shifted towards the SME segment. And today, when I speak to bankers, the SME segment actually is possibly the fastest rising segment in terms of their profitability and in terms of their income line. So tell us a little bit about the SME segment, how you view the SME segment, how you've managed to turn the SME segment into a profitable asset class, and also the strategy that you're bringing to new markets such as DRC or Burundi to gain market share.
One thing which you need to be mindful that conventional banking, the historic one, is no longer valid, and it cannot be able to scale where you want to be. I think when I spoke about the CRDB perspective and how do we engage with our partners, both locally and internationally, we are looking about how do we continue strengthening our operations, creating strong foundations for resilience. At the same time, do things which create impact to the community. When you talk about corporate, it's a niche market, and these are specific. But with our philosophy, where we believe that we have 3 pillars philosophy. 1 is about reinvent the business you have. Number 2 is grow the business. Number 3 is future-proof. So if you want to look the future, the bank of the future, it is necessary to have the right partner. And it's necessary to do a kind of segmentations, looking on the customer segments, and SME, which is MSME, becomes important. Also, the special group, because the future for those of the banks in Africa, especially Tanzania and other countries around East Africa, there is significantly unbanked. For example, Tanzania, we are 61 plus populations. The banking sector is around 22% as the recent results. But you look on the SME and MSE is around 80% of the market, they're occupied by them. That means you have to define your operating model philosophy. For CRDB, what we did basically, partnership globally are meant for many things. 1, technology transfer, capacity building, financing solution redefine, where we have to define solutions that fit for specific segments and move away from the general solutions which are provided for everyone. And that means if you're looking, for example, agri segment, if you're looking for trader segment, obviously you have to have different solutions. So for CRDB, how do we look on MSME? We have segmented those segments. And how do we make them profitable is the entire operating model, because there is a segment which has to be fully automated, where technology advancement support you to deliver solution much easily, accessible, and more efficiently. That means we have enabled our infrastructure technologically to provide solutions, being lending, being onboarding through digital. And that could not be possible without having partners like many other fintechs. Secondly, we have also looked on the category where you move from MSC to SME, which close to micro. And these are already automated in terms of process flow, where you enable process flow in terms of data collections, credit ratings are automated, and that means makes easier for data quality, but also efficiency in terms of asset management. And then you have SME, which is merging to corporate. Nevertheless, when I meant about local partners, it's about strengthening your wings by using the infrastructure of your corporate space, which is available, because we understand that each corporate, by any divisions, there is MSC or SME attached. If you're a manufacturer, there must be supplier, there must buy of your goods, you have distributors. And so how do you connect the entire distribution channel through the value chain? So CRDB, for example, he has mentioned about trade-related activities. With our Afrixim, we are able now to provide off-balance sheet services, both for MSC, corporate space, where, for example, I gave you an example of about Tanzania, where we had 2 bigger projects, SGR, as well as Nyeri Hydro. That particular project employed more than 10,000 people. That people must be fed. They have to get all the necessary. That means there is all what you call mamantliye, the small women's. They will supply their cabbage and the rest. So how do you provide that solutions? You have to reinforce through corporate relationship with particular partnership, where you enable that they will supply, you have to pay them, and they will guarantee the supply. That means you are able to grow them. If you look, for example, special groups, which are women, I think they are biggest entrepreneur, and that means solutions that fit for them is necessary, but they are also literate. So financial inclusion becomes necessary. For CRDB, the approach which we have taken is different, because we have been doing from the bank perspective. And the bank, we are not very good in terms of training, conducting training, but also moving around the country. So the bank decided to create a foundations which is focusing purely on women and youth. But we have seen recently a lot of innovation coming from youth, where people are graduating, there are less employment, but they have a mindset about creating something which can be either technology innovations. So we call it startup. And through the foundations, we create an incubation center where we are training them and we are giving seed capital. So these are the SME tomorrow. But the current SME, which are close to middle, we are doing more of relationship management concept. And I think historically, when you go to bank, you have to come up with a checklist, which is standard for everyone, either corporate or retail or individual. For CRDB, we have done differently. We have done customized solutions for SME, either for asset financing or project financing or contractual supply. There is a clear way of solution. And how do you manage now? Because lending is one, controlling the asset to be remaining quality is the second one. For the mass market, where MSC is massively available, you have to apply technology in terms of early warning signals, data quality collections, communication protocols to be clear. So using our infrastructures, we are able to scale out our growth through the SME space. But we have also moved away from what you call bricks and mortar. And since we have invested heavily on the technology, we have now enabled our agencies, which are sitting on behalf of us on various streets, to be advisory center, because we invited them and we actually share the vision that you can only create your own customers. But these customers are looking for two things or three things. One, deposit. Two, borrowing, and possibly advisory. And how can they be supported from connections? So we have given them tools to do so. And this is why we are also looking expansion. Because what we have done at the local market level, it gives us an edge to accelerate solutions for those markets, because they are still highly unbanked populations. Technology-wise, they are behind. With our technology capabilities, is about actually replicating the same model, trying to localize within the same philosophy of their language, of their culture. And this, the bank is managed locally, from the top management to the rest of the operations. We're able to be seen as a local bank. And that is very important. However, we understand that you cannot look on SME without looking corporate, because infrastructure, for any infrastructures, it is all about corporate. But the demand is very high. And that's why I still believe that for partners which CRDB has been working with, is not about equity. It's a partner who's intending to be transformative with our visions, because it fits for growth. And that's why we have been doing that.
When you're expanding in new regions or new countries, you're faced with a different regulatory environment, different rules, different procedures. I mean, maybe we'll start with William and then we'll go to Kuda in terms of your experiences there. What's your experience? Are regulators speaking to each other? Are they making it easy for groups to expand regionally, or do you think more needs to be done on that front?
Yes, so I think in the ESC, a lot of things are coordinated, especially at the regulatory level. So the regulators often speak to each other, and you find that the rules of the game, do not differ quite much, although they have to localize in their context of their local markets. But I think if you look at the way the Kenyan or the Tanzanian banks are expanding regionally, it's not as bad as if you're going to maybe SADC or West Africa. But that said, I think there's still a lot of regulatory risks in expansion, and I think DRC is an example where capital requirements change, and requirements for shareholding change every so often, and there's a directive one after the other. But I also think it's just a matter of time before these markets mature to a level where every regulator is comfortable with a bank coming from another market, because I think sometimes also just flexing muscles and trying to be seen to be the boss in town. But that said, we actually think when banks subject themselves to different regulatory regimes, they actually emerge stronger. Because there's a bare minimum, and then the others are add-ons, which actually means that you have to up your game a little bit more than if you're just dealing with one regulator. So it's there are pluses and minuses. Obviously, the cost of regulation definitely becomes higher in terms of compliance. So you have to comply with different requirements in different countries. So you have to pay more for that. But on the whole, from our perspective, I think it's better to subject yourself to different regulatory environments. And the beauty from what I see is that the East African regulators at least are speaking to each other, and therefore it's a lot seamless compared to other regions.
And so, Kuda, from your perspective, ultimately, you're, I take it that you're in every country and you're speaking to every single regulator, is that right? And can Afreximbank help smooth the process from a regulatory perspective?
Let me take the angle of regulation from a trader's perspective, not necessarily from the financial institution. So we are struggling with so many things that hinder cross-border trade, and one of them is issues to do with the trader not knowing what regulations apply when selling products in another market, right? So that's a huge gap that we identified. Then there is also the challenge relating to access. How do you access when you are not physically present in a market? How do you access somebody's market? And I go back to the Africa Trade Gateway that we established. It gives you access as a trader to, when you are a member of the Africa Trade Gateway, or when you sign up, which is what we're encouraging commercial banks to do. What the benefit there is, a trader is able to read what regulations, what trade information, what certifications, etc., is required in a country through what we call the trader. So the platform says if you're a trader in these specific goods, you log in, you want to know what Malawi requires if you are trading in a particular good. That gives you that access. So we would like to have clients use some of these facilities, especially on screening for KYC. You don't know who you are dealing with. And this is an impediment to cross-border trade. And we are trying to deliver a solution so that clients can be able to access and see if you're dealing with a verifiable company or a verifiable individual. So KYC is dealt with on that platform. Capacity to do payments. You can then access under the Pan-African Payment and Settlement System, ability to pay in your own local currency. If you're in Uganda, you are trading with somebody in Malawi, your account gets debited in Malawi, in Uganda shillings, and the trader in Malawi is able to receive Malawi kwacha. That's what the ATG, or the Africa Trade Gateway, is about. And I thought it is important that I highlight that, because when you're speaking cross-border trade and what a development bank like Afreximbank is doing in that space, it helps to mitigate against the challenges that we face in cross-border trade activities. So we believe we've got some solutions to the challenges that bedevil the traders on the African continent. Thank you very much.
Thank you to our panelists, Ms. Pearl Nyosi, who's Investment Officer at BIO Invest, Mr. Abdulmajid Nsekela, Group CEO and MD at CRDB Bank. Next to him is Kudakwashe Matereke, Regional Chief Operating Officer at Afreximbank, and William Nyaoke, Regional Director for North Fund East Africa. Thank you very much for your insights. Thank you very much for being a great audience, and enjoy the rest of the meetings.
CRDB Bank, tunakusikiliza.